Uranium absolutely cratered this week. Let's go into what that means, why it cratered, and what's going to happen next. First, let's talk about price action. We have the Sprott Uranium Miners ETF down 10.95% on the week. Now let's compare that to the Russell 2000 index, down 4%. There's clearly a pattern here. Clearly, the markets are correlated and trading together in some sort of way. Now, there was absolutely nowhere to hide in this market. There's a big oil supply crunch, which is a present problem. And look at what happened to oil, down 6%. And what's even crazier is when you look at the VIX fear index. Let's say you go long the VIX as a hedge. Well, this is the fear index. It goes up when markets go down. That was down 2.53%, meaning there was absolutely nowhere you can hide. Everyone is getting slapped in the face right now, taking it on the chin. That's just all by design, because this is what the Federal Reserve is doing. We have this from Blockworks. Financial tightening may be further along than you think. Look at that chart of interest rates. That's the 30-year fixed rate mortgage spiking. The Fed is telling us not to spend, and we're listening. Look at the velocity of money. It has collapsed to an all-time low. In our history, it has never been this low. This chart goes back to 1960. So what that's telling us is that an essentially planned economy, while people are still listening to the Federal Reserve, and while we have an out-of-control collapsing bond market, everything is crashing together. There are no safe havens as of now. Now, a lot of people are expecting a boom in commodities once they diverge from the rest of the market. But right now, we are not seeing that. And there is literally nowhere to hide. So either you're in cash, which is inflating at an 8% rate, or debasing at an 8+% rate year-over-year position, or you're allocating your capital as a long-term investor. And so if you're not safe in stocks, oil, or even the fear index, then all you can really do is figure out what the highest upside assets are for the long term and invest. Now, is uranium that type of asset, and will it diverge? It clearly outperformed the market last week. It's underperforming the market this week. But let's look at the underlying fundamentals, because that is literally all that matters when you're investing in the long term. First, French nuclear power crisis frustrates Europe's push to quit Russian energy. France typically exports electricity, but now it risks blackouts and a need for imported power because of problems at the state nuclear operator. So what this screams is that Europe needs nuclear power. Renewables and any other initiatives are not working. Clearly, this problem, this underinvestment in nuclear power in France, is frustrating the entire European push to quit Russian energy, which means they are relying heavily on nuclear and they need it. There's no other solution. This proves the need to invest further into nuclear. Romania sees an opening to become an energy power in Europe. The Ukraine war could lead to breakthroughs in nuclear power and natural gas with Washington's help. Romania, just another domino in the global adoption of nuclear energy. Japan government wants to speed up reactor restarts, says draft policy. We know their new government is now favorably disposed to nuclear energy. We've covered that they want to restart all the nuclear plants, or at least most of the nuclear plants that were taken offline after Fukushima. Well, now they want to speed it up. Moving around the world, floating nuclear plants. Denmark Seaborg wins flagship European accelerator grant. Company aims to deploy compact molten salt reactors on power barges. So now we have technological advancement. We have the European Union doing what it can to invest in this. This metric says it all. When it comes to global adoption, this metric says it all. China's pipeline of new nuclear power is the size of the rest of the world's combined. Look at that. Talking about the world's second largest economy, China, boom, This is the global adoption we're talking about. This is the demand coming online. This is why people say the price has to rise to meet this demand. Now let's talk about the world's largest economy, the USA. Biden proposes changes to help rescue California nuclear plant. Everyone, the establishment, seems to want to have a renaissance in the USA. Senator Dianne Feinstein, with the Diablo Canyon nuclear power plant scheduled to close, state regulators project years of electricity shortfalls. As these challenges converge, PG&E should reconsider its decision to close Diablo Canyon. Dianne Feinstein, why I changed my mind about California's Diablo Canyon. So this is the global shift in psychology. It's bipartisan. Rick Perry, you have to have a base load of energy. Former Energy Secretary slams Biden's push for a failing energy agenda. And nuclear, when you think about who the left really doesn't like, what industries they don't like, and power generation side of it, fossil fuels is on top of it, and nuclear power is number two, a close number two. So until you get a nuclear power system in place, and we've got the technology, it's stunning to me that we can put small modular reactors out there. You know, there's a host of companies, a host of technology that's out there today that could address this. I hope some states will take the lead on this. If the federal government's going to make it so hard to get a permit for a small-minded reactor, then the states need to get this into their hands. So this is a bipartisan move. He's trashing the left for historically shunning nuclear power. Well, clearly they're now adopting it. This is how you be an early stage investor. You look at the greenification of the COP26 climate summit. You look at how it trickles into governments. You look at how regulation starts to support it, how the Biden administration wants to start buying domestic uranium. You look at how the establishment just starts to support it. It's a bipartisan move. And eventually you have a global renaissance and a reawakening. Obviously, that's difficult to see in the price action, which is very short term. But if you have a time horizon more than a few weeks or days, then you can just see the stuff percolating and where we are going. Here's an analysis done by nuclear fuel consultants, Trade Tech. They are forecasting that spot uranium could trade at $108 per pound next year, 2.5 times higher than today if current surge in nuclear demand continues due to energy crisis, net zero goals, pivot from Russia. So these guys have done the math. They see the future demand coming online and they see the supply deficit. It's pretty great to invest in assets that have a known outcome. Obviously, nothing is known when it comes to price action because assets in financial markets are completely irrational sometimes. And the market can stay irrational longer than you can stay solvent, but it gives you peace of mind at knowing that eventually the bull case will play out, and why many wise people who really understand this industry are expecting it to. Canaccord Genuity comments on U.S. government's proposed $4.3 billion domestic uranium purchase. We talked about this last week. The U.S. government wants to buy up uranium, and they're going to put their weight behind it with $4.3 billion. The positioning will clearly not be missed by utilities and is highly supportive of our view that demand for Western origin pounds is increasing, creating an even more pronounced supply deficit in the West. So let's go into the math, which proves once and for all that we're in a supply deficit. Well, John Quakes put this analysis together. Today, nuclear power capacity and uranium demand is greater now than it was before Fukushima. Look at the chart of the uranium spot price before Fukushima. It went vertical. And look at where it is now. Demand is surging in a global decarbonization drive to fight climate change and achieve net zero. In the midst of an energy crisis, a nuclear renaissance is now underway. Even before Russia invaded Ukraine to create geopolitical chaos, nuclear fuel demand was around 200 million pounds of uranium, but mine supply at only 135 million pounds. Underfeeding by enrichers was providing about 20 million pounds per year. To reduce that deficit, as conversion ramps back up, and nuclear utilities must purchase more mined U3O8 so enrichers can overfeed to produce more enriched uranium to replace lost Russian supply. This is the knock-on effect that is yet to hit. Underfeeding created secondary supply, which now flips to secondary demand due to overfeeding, which will drive up uranium demand, deepen the massive supply deficit, and send uranium and mining stocks skyward in the months and years ahead. When you're deciding where to allocate your capital in this deep red market where there's nowhere to hide, you want it to be in the highest quality, best fundamental case assets with the most upside. So let's dive into the uranium market. Here's a summary from the Motley Fool, which lists off some companies that are well positioned to take advantage of this. Why uranium stocks plunged today but could rebound quickly. This goes back to the big plunge on June 13th. Uranium stocks plunged today as the broader market slid on fears of soaring inflation and a looming recession. What with a majority of leading economists even predicting the US will slip into a recession in 2023. So what? Prices of nearly all commodities, including precious metals, agricultural products, and energy, fell on Monday. Uranium prices, though, held pretty firm at around $52.40 per pound. The war between Russia and Ukraine has disrupted the global energy markets and driven prices of oil and gas to multi-year high. This unanticipated turn of events has forced policymakers worldwide, especially in regions like Europe that are already facing an acute energy crisis, to renew their focus on nuclear energy to fill gaps in gas supply and ensure utilities can meet power demands. Uranium is the key fuel that powers nuclear reactors. Demand for uranium, therefore, has soared even as supply remains tight. The world's largest uranium miners are running low on supplies since they curtailed production in recent weeks to support the market. In its recent earnings conference call, Cameco, the world's largest traded uranium miner, even called the current market more positive than it has seen in a very long time. Prospects are so strong that miners worldwide are restarting uranium mines idled for several years now. Elsewhere, companies in development stages are scrambling to advance projects and start mining uranium as early as possible. One of the best examples is Uranium Energy, which is making aggressive growth moves. Just this morning, it announced plans to acquire Canada-based UEX to gain entry into the world's richest uranium resource region. The combined companies will have the largest uranium asset base that is focused exclusively on North America. That is huge. Given the geopolitical environment, the oil and gas markets are not likely to cool down anytime soon. That and the threat of US banning uranium imports from key supplier Russia could keep uranium prices humming. The problem is that none of the publicly traded uranium miners are involved in uranium enrichment right now, and the US has only one commercial enrichment facility owned by UK-based Urenco. Camco, for that matter, has a 49% stake in GLE, a company that's developing a uranium enrichment technology. That's all there is in the US as far as uranium enrichment is concerned, and even $4.3 billion will not be able to boost domestic enrichment overnight. The key takeaway here, though, is that President Biden seems keen to boost the domestic uranium market, and that means the threat of US banning uranium imports from Russia still looms large. So this summarizes exactly where we are. I will leave you with this, which speaks to the revolutionary nature of this asset class. Nuclear energy has one of the smallest carbon footprints of all energy sources. The use of nuclear power avoids more than 2 billion tons of CO2 emissions every year, the equivalent of removing half of the world's 520 million vehicles. We will stay on top of this booming early stage market, which is just getting started.